What's up, investors? Welcome back to the Investors Club. If you'd like to learn about dividend growth investing and personal finance, go ahead and subscribe and hit that like button for more content like this. So I wanted to give a little update on the portfolio. Today was a pretty good day. We made it back above 13,000, which is nice to see. We're still down in the year about 3%. Not bad. Could do better. But I think we can easily get back above, our 1344 or 13,446. I think I can easily get back above that. I do have a dividend payment coming from Store Capital, $7.20, coming in sometime, coming in October 15th, so that's nice to see. Today in this video, I just wanted to tell you how I found out about dividends and then what pushed me to start earning passive income with my own dividend growth portfolio. I saw how it was working with other people on YouTube, and it just really piqued my interest. So back in March, after the markets tanked, I remembered a quote I read from Warren Buffett saying, be fearful when others are greedy, and greedy when others are fearful. And I saw this as my opportunity to begin investing. So first thing I did is I got in contact with my advisor through Ameriprise Financial, and I know a lot of people are starting their own retirement accounts and not going through firms like Ameriprise, but I just felt way more comfortable having an advisor where I had no idea what I was doing yet. So I met with my advisor and I started my Roth IRA, and I put in a lump sum of $6,000, which is the max you can put in right now. For those of you who might not know, a Roth IRA is actually set up where all your contributions to that account are from after-tax income. And since your contributions have already been taxed, you actually aren't taxed on any of the money that you take out of the Roth IRA when you go to take it out at 59.5 is when you can. So I've maxed out my Roth, and I have 23 shares of IVV, which is a low-cost S&P 500 index fund. And I started watching that gain momentum as the markets began to rebound. And then one day I earned a dividend payment on my 23 shares for about $28. I think what felt so good about that $28 was the fact that it was totally passive. I didn't work for that money, but my money I put in was working and making me more money, so that was really exciting. That initial $6,000 I put in had now made me $28. I was getting paid to hold these shares, and it felt so good even at such a small amount, So after this, I just got hungry for those dividend payments. I began doing as much research as possible. I watched YouTubers like Joseph Carlson and Andre Jick, who shared information about their own portfolios, and then I decided it was time for me to get in myself. So the funny thing about this is that I must have not done enough research, because the first few stocks I bought were Delta Airlines, Carnival Cruise Lines, Wells Fargo, and Royal Cruise Lines, which pretty much all did bad for me except Royal Cruise Lines. But I've lost money in Delta, Carnival, and Wells Fargo, so might need to look back and maybe get rid of those. I was just looking at those stocks because I saw they were down so much, and was waiting for their dividend to come back, but if I could do it all over again, I'd do it a lot different. Like I said, I'm still holding. I'm waiting for maybe it to come back, but I know it was a mistake, but I'm kind of glad it happened because it taught me not to buy a stock based on speculation. So it was an opportunity to learn. I think I've done a decent job since then to keep my head and do my research rather than dive headfirst into a stock. I'm still definitely learning when it comes to investing, but I'm glad I started when I did, and I've learned a lot in these short months that I've been investing. I should also throw out there that there was about a 2-week period before I started dividend investing that I decided I'd try to day trade, and I think I lost around $700. So that obviously went really well. But losing that money also helped push me to find dividend growth investing, something that was much safer, much less time consuming than trying to day trade and take those big risks. So if you're just starting investing, my advice would just stay away from day trading in general. I'm not saying people haven't made money day trading, but I'm saying there's probably been a lot more that have lost money than made money. So that's it for this video, guys. I just wanted to give a quick update on my portfolio and talk about what led me to start dividend growth investing. I'm gonna make a more in-depth update on my portfolio probably within either today or tomorrow, so stick around if you want to see that. But if you like this video, go ahead and like and subscribe. It really help my new channel. So thanks guys.